Mauritius's trade deficit narrowing by 8.8% in the first quarter as revenues from cane, sugar and fish exports rose. Now, statistics, Mauritius expects the deficit for the whole of 2013 to widen by about 15%. So to delve into these figures, we've got Durand Tudor-Jones, the Sub-Saharan Africa analyst at Business Monitor International, joining us on the line. Durand, thank you for joining us. So overall, I mean, you're looking at, I suppose, a positive number coming through where exports are increasing at a faster pace than imports. But what's your evaluation of what the latest trade stats are telling us?
So as we've seen, exports in the first quarter are up almost 11%. And this is broadly in line with our view that demand from Mauritian exports should begin to recover over the course of the year, in line with improvements in conditions in key export markets, particularly Europe, which remains the country's, by far the country's biggest trading partner. That said, we do expect demand from Europe to remain subdued over the next few years, which should continue to weigh on key exports such as textiles, which I think this quarter saw a year-on-year and month-on-month decline, as well as sugar-related products. Also, I think it's important.
Sorry, carry on, and I'll move on to some of those export markets, but continue.
Also, I think it's important to note before getting too carried away with the export numbers, is that the recent narrowing of the trade deficit in the first quarter is due as much, if not more, to a pronounced slowdown in imports rather than, in fact, a major recovery in the export sector. I think a 0.9% increase in imports is due to the sort of ongoing weakness in the construction sector. I think these problems will continue to, shall we say, sort of over-flatter the trade figures for the next few quarters.
Interesting, as you say. So that you see as a reflection of weakness in the local economy?
I think it's certainly partly that. I mean, private consumption in Mauritius has been relatively subdued now for the last couple of years, and this is obviously going to suppress demand for imported goods. But I think a key dynamic here is the slowdown in the construction sector, which has been a key driver of demand for capital goods and machinery in recent years. And the slowdown in recent quarters has really had a sort of a braking effect on import growth in the country.
Now, what the latest trade figures shows that Britain is still the most important export market. It's got 19.3% share of Mauritius's exports. But are there any major shifts when it comes to export markets right now, and shifts away from traditional export partners?
Well, I think there is a shift in process, but it will be one that will take place over a number of years. I mean, as you said, Britain as well as France and a number of European markets are still key trading partners for the country, not only for visible goods but also for the key tourism sector. So while the country, as you say, is reorientating towards the sort of faster growing economies such as India, China, I think this will only really start to have an effect sort of over the medium term. And that is the reason that we do see the country's trade deficit improving over the next few years. But this is going to be a process rather than sort of a quick fix.
On the currency front, I mean, the rupee, in fact, has been pretty stable for some time now, trading at just around 31 to the US dollar. Do you see the deficit as it stands right now? Because even though we've seen an improvement, it is expected to widen this year. Do you see that having any feed through into the currency? I mean, any forecast there on currency stability?
Not too much. I'm not too concerned about the currency at the moment. I mean, we've seen it trading, obviously, in sort of a weakening trend, but remaining relatively stable against the dollar. And we think this trend's going to continue. In terms of the balance, obviously the balance of payments pressures. Yes, it's right to say that there are these structural weaknesses in the economy at the moment. But the current account deficit, which is still in the double digits. At the moment, we see these shortfalls being covered by the financial inflows, such as foreign direct investment, being covered by. So this should provide some support to the currency. We're not overly concerned about any sort of potential balance of payments crisis or too much pressure on the external accounts.